How are you guys doing today? Welcome in. Another breakdown here, pre-market with the Everyday Growth Advisors. Hope you're having a good morning. And we have a interesting breakdown today because $2 trillion worth of options are going to expire. We've hit it pretty much nail on the head this entire 3 weeks so far. Kind of feeling like the crystal ball is getting re-energized, guys. It's been pretty nice. If you've been attending the live streams and you've been consistent about it, you know exactly what we've been talking about and how we've been playing it. And on this week, I started the week out pretty red with almost $5,000 in losses, and then very quickly turned it around and now currently sit at around $15,600 in profits, which is pretty nice, I must say. It was a rough start to the week, but then I managed to turn it around after taking a break on Monday or after Monday, and just got my mentality straightened out and got rid of my bias. Our calls for 43.36 rejection happened, just shy of it slightly at 43.20. The perfect rejection was 4,300 pretty much, right? And now we're seeing that downward descent as we spoke about in all of the live streams in the past 1 to 2 weeks. So we've been talking about this moving all the way up here, breaking here, getting possibly rejected here, and then coming back down for the wave down back into the 4200s or the 4241s, and that's going to be the key levels, right? This pretty much this range right here. Anywhere in this range is a possible buy up. And if we do break below it, then we start to get into the chance of getting below at 4060 or 4011. These are the next two bounce levels below that. So if we get past that, then we can talk about the ones below that. But I don't think we're really going to fall that deep. Coming back to here is pretty healthy for the next run to the upside. I've drawn these arrows here just for illustrative purposes and entertainment purposes. This is in no way a prediction at all. You can't predict the stock market. You can't predict anything that's about to happen. We're just looking at the technicals and price action day by day, and we're looking at the macro backdrop on what is happening with dealer flows. We're watching what happens to sector rotations and where we can best have the risk-reward ratio to put our money in so that we can, as traders, succeed every single trading day. So if you've been following along on this stream, then you would realize that there isn't a lot of method to the madness except for being super prepared and doing your homework before the market opens, and that's what we do for you, and that's the reason why you're here, right? So I hope that these live streams reach a broader audience one day, and everybody gets the chance to attend these because they're straight gold. I feel, at least, I think that they're great value. Okay, let's jump into it. So today, the elephant in the room, we have $2 trillion worth of options expiring. $975 billion linked to S&P 500 contracts, and then $430 billion linked to derivatives. The rest in rolling or existing positions for single stocks. So total, all in all, about $2 trillion. Market dealers will have the option to either pretty much roll over, or they will have the option to let the option expire. This means a lot of gamma fluctuation possibly ahead of a lot of things that are going to happen in the next couple of weeks. Just to get your head in the right space, in a couple of weeks from now, we have a Jackson Hole meeting. We have new CPI numbers. We have Fed again FOMC meeting. We have, what else do we have? We have a bunch more of things. Jackson Hole is a meeting for all the Fed members to go, by the way, and that's typically where they talk about policy making. That's an important event that will be happening, and we typically see some volatility around that event. And then we also have seasonality. Remember, we have the midterm elections coming up, right? In I think November, right? So if you look at seasonality so far, it's been tracking pretty accurately, right? August is meant to be slightly flat, or obviously climbing up in the first portion and then flat, and then end or mid-August we see that downward move heading into September, and then September tends to be flat, and then with another down move heading into October where we see a recovery, and then from here it gets a little woozy, but from here to here we can at least see that we have a downward trend heading into the end of August from seasonality. Okay. So that's something that you should definitely keep your eyes on. Hedge funds are taking a bit more risk to the downside here. The data just came in this morning, I believe. So they seem to be hedging with their gears more to the downside here than they are to the upside, which means that they have, after taking out some of their shorts, they're now trying to position themselves to be in a hedged position, hence the name hedge fund, right? So that's okay. That's other things that you need to know. Technical perspective, I just covered S&P 500. If we bounce at 42.35, then this becomes the interim local low, and then we go back up to retest 43.40 roughly. And if we break that, then it goes zippity zip all the way up into 4,500. So that's a big jump over here. And 4,800 is pretty much back to all-time high. The midpoint between these two is going to be, let me have a look. 50% retracement is exactly where we are at, 4,300, pretty much. Okay, so this is actually a very possible spot for chopping to happen. Chop sideways and then possibly move down to retest some lower levels of fib, and then bounce to the upside. So we'll be watching that pretty closely. Let's look at NASDAQ real quick. NASDAQ breaking out, but then also pulling back here. NASDAQ needs the $13,000 bounce. If it breaks here, it's going to go down to 13,169 and then 13,000. Last line of defense for NASDAQ, if it doesn't want to get completely clapped, is 12,816, which is this level right here. And this is pretty much a last line of defense unless we go straight down to where we came from, pretty much. So we'll be watching this closely into next week as well, on Monday and Wednesday and Friday. And I'll just keep updating you guys whenever I see something that's amiss. Good time to purchase some VIX out the money options, or if you want to purchase UVXY instead. I personally have UVXY shares, which I will be buying and adding on to my portfolio. This is a good thing to buy, to hold for protection. It is a levered ETF. And a levered ETF for VIX, and personally I just like trading this one because it's just a little easier for me to get a hold of a bunch of shares at a pretty cheap price, and it's sufficient in terms of allocation for my capital. IWM got rejected at the 201.50 level, which we were talking about last week. Pretty straightforward level of rejection here. And really nice rejection, and then now heading downward. We played IWM puts on this week's trades. We played 195 puts. That paid pretty nice, 35% on the move down. And then again, some right here for another 300 bucks. So we'll see this one continue to swing downward. There will be a support at around, let's see here, 193.71, and then below that is going to be 189. So there's going to be two consecutive levels of support here. First level support, possibly a pullback, and then next level down here into 180, 190, somewhere around there, 188, 190. So 189 to 190 pretty much is going to be the support bounce for IWM, if we get down all the way there, of course. Okay, so that's your technical update. If you have any tickers that you want me to break down, go ahead, put it in the comments. Good morning. What's up, Jonathan, how are you doing today? Also, if you do want to support this channel, I believe that you can send super likes and stuff like that, or you could also be a member of our channel by clicking the join button on our channel. All of those things go directly to improving the stream and truly helps me out. If you don't want to do any of that, then I just truly appreciate it if you could take the time out to click subscribe and the like button, because that thoroughly helps me out for this video to reach other people. So if you could just take a second out of your day and hit the like button, I would really truly appreciate it. Okay, no taker, but maybe the Hang Seng Index. Ooh, okay, Chinese stock market. Well, let's see. China is loosening monetary policy right now. That's the word on the street. The bird is the word. The bird. The bird is the word. Sorry, I got reminded by that little thing from Family Guy when Peter is singing that song. Okay. Demand zone in this area right here. Actually, kind of want to bring it up a little bit. This is kind of a kink in the data. This is probably more accurate right here. This is kind of kink. This is a good data set. This is a demand zone right now. There are multiple supplies up here. We won't get into supplies. Let's just talk about where demand's likely to come in. This is a potential level 18,370. 18,370. That's one level. Looks like it wants to go back down to test that. I see a little bit more pain here before Hang Seng gets a recovery, but there is strong support in this region too, so it could bounce here. Yeah, it's tough. This is you'll have to wait for this reversal to happen before you can even you know, take any upside positioning. Personally, I think you're better off trading something like Asher. This gives you exposure to China, and it's more structured towards industrials and finance. I prefer trading this one. But that's your Hang Seng Index. I mean, it's in the demand zone right now. Looks like a possible bounce, but I think it wants a bit more blood before it bounces, to be honest. That's what I'm looking at. We can always look at it again when it starts bouncing. Tesla, potential bull flag on the hourly. Let's have a look. Oh yeah. Yes, it is. I already have it drawn out. It's a bull flag into a bull flag. It's bull flagception. You guys see that? Bull flag into a bull flag. It's a big bull flag into a bull flag. It's a mini bull flag into a big bull flag. It's a flagception. This one makes it pretty easy to trade, but personally, you gotta be careful. So pre-market is already down to 896. Therefore, the bottom of this flagpole is somewhere around 888, or all the way down into, yeah, it probably wouldn't get down to 875. That means it breaks the flagpole. I don't know if it will do that today. But 888 is very possible. You're looking at a, what, $12, no, $11 downside or $9 downside, something like that. Very, very possible with Tesla. But I would say wait for a pullback. I would say at the market open, don't chase this thing to the downside. Wait for it to pull back and then take your downside if you can confirm that it rejects. And the rejection level has got to be at around 905 or 906. This level right here, 905, 906. Even here is possible, but I think this is a stronger reject level. So you're looking at either here, pretty much somewhere like 906, 907. And then second rejection level possibility is 902. So 902 or 906, 907. So you want Tesla to kind of pull back and then reject on any one of these and then start, you know, its descent down into 888 for Tesla. That's what I would be looking at. Okay. Okay, so other things that I'm watching today. Apple. Apple looks great if we can break below 171. I want to play this to the downside. It's had a huge rally. Of course, there's some bullish news awaiting. I had an alert and it's already broken below. But we need to see Apple rally a little bit and then start rejecting 173 for us to have that downside. Your reviews are indeed gold tea. Congrats on your management. I inspire to follow your footsteps in terms of recovery. Hey man, don't... I really truly appreciate the kind words. Don't sweat it, man. I truly enjoy doing this for you guys. I think that education is perhaps one of the most important things in the world that I can, provide. After being in this thing for 10 years and, you learn a bunch of things, you feel compelled almost to help other people because you don't want them to jump into the same footsteps as you. And anything that I can do to provide value to you guys to help you, my job is not to show you the right way, but it's to show you where not to walk. I'll point out the obvious mistakes. That's my job. I'm not here to profess that I know everything or that I'm the best at anything. I'm not. I'm learning every single day, and that's just the nature of this game that you play. The stock market is not a place where you can master everything. Some days you're just gonna perform poorly, and that's just the way it is. Losses are part of the game. You just have to learn how to master your psychology and come back stronger when you do badly. So don't worry about recovering. Just keep going and remember that every day that you close another trading day and you don't lose your entire portfolio, that's a successful day. Okay, the odds are literally stacked against retail traders, and to be a professional trader, you really have to take that retail mentality out of your head. That psychology has to be really strong. You can't get trapped into any kind of FOMO. You can't get trapped into any kind of sell-off. You have to take everything objectively. When something's moving too good to be true, you have to do a double take. I'll tell you guys that there are some major lessons that I've learned over the years that personally I feel are really great, and maybe I'll share like one or two of them. But one of the key things that I have learned over the years is a trade that is extremely good, like a setup that is extremely good, rarely gives you enough time to even enter it. Like, I don't know if you guys ever realized this, okay? But if you are taking a trade and you feel like, oh, okay, something's like moving up or down, the best trades will move without you. It's almost like you're kind of trying to catch something, and it's rarely going to give you enough time to enter it. Those are the best trades, okay? And when you see like it's starting to move, don't see. I'll tell you one thing. Most traders, here's the mentality. People who are pivoting between being a retail trader and being somewhat a professional trader. This is where majority of people think they are, just so you know. Because in 2020, 2021, a lot of people had free time on their hands. They started day trading, right? So a lot of people have 1 or 2 years under their belt, and they think that is the perceived amount of experience that you require to day trade in the markets. And then they think that they've like seen, oh man, I've seen so much shit through 2021 and 2020, but they haven't been through real corrections, real bear markets. They haven't been through, financial collapses and stuff like that, because that's where real price sentiment and psychology is tested. Okay, right now, what is going on is more of like a economic perception of recession, and it's not really a true recession. We're seeing the data come in, and CPI numbers are softening, right? The Fed is literally in a chicken and egg situation where it doesn't really, or rather cannot make a mistake here, right? This is a different kind of a market that we're in compared to one where there is systemic risk. This is not a systemic problem. This is a supply and demand problem, which has been caused by a black swan event, aka COVID, right? So when something like this happens, the way that people react to the markets could be very psychologically charged. It's very different from something that is a policy mistake or overlooking of policy, and just the effects of it is very different, because at that point of time, it's like somebody messed up and, there is a huge bailout, or there's a huge, influx of money that comes in, which I'm talking about post-2008 financial crisis, right? But when we talk about the current times as a trader, majority of new traders who have just joined about, 2020 and 2021, they think that they have experienced some, hardship, but it's truly actually been a very walk in the park kind of a trading situation, because most of 2020 we were rallying, and then we had that big correction in 2020 back end. We basically ripped all the way into 2021. Whole of 2021 we ripped with like 5-10% pullbacks along the way. And now in 2022 they're like, oh man, this is the worst market I've ever traded in. This is the worst. Yo, zoom out for a second. You guys don't look at things. Zoom out, right? This is just a normal correction in the blip of things. Okay, it's a normal correction. And so when we look at these markets, you gotta always remember the odds are going to be stacked against you. You just gotta learn market psychology. That's the main thing. Okay, sorry, I went on a bit of a rant there. So as I was mentioning, the best trades are the ones that really do not give you much time to enter. That's one thing that I've learned. And also learn to trust your gut feel. Like if you feel like you have come to a certain point in your trading where you can master the art of trusting your gut, you are more than always going to be right. Let me tell you, there's an inside joke that runs on our Discord. Okay, many of our Discord members, they know this. There's an inside joke that runs that T always predicts things 2 weeks in advance. And that's because whenever I say something's going to happen, it typically does happen, but with a 2-week delay. And it's hilarious because then after it happens, I second doubt myself because it takes so long to materialize that I end up taking the opposite side sometimes, and then I end up blocking my own mentality there. And I end up losing or chasing that train later on. So, even me, like I might make the right prediction, but then my timing is off, my cadence is off. I've learned that now whenever I think of something, delay my reaction and have more patience, because patience is truly the most effective transfer of wealth in markets. And that's just the real truth about it. Okay, let's look. Does anybody have any tickers for me to break down? If you don't, then I'm going to continue to cover some tickers that I'm watching. Also worthy of note, whatever this company is, SMMT had 90 million shares bought by the CEO. It's a dollar stock. I wouldn't trade it personally, but I just wanted to give you guys I saw someone posted on Twitter. I thought it would be worthy of sharing. Okay, let's do some technical updates. Thank you for all of you for attending the live stream today. Once again, if this is your first time here, click subscribe, leave a like. I truly appreciate it. You can also support our channel with many other ways. You can click the join button, sign up for a membership, which is only like $2 per month, $2 or $3 per month to support this YouTube channel. And the live streams that I give you every Monday, Wednesday, Friday for, let's say, 12 live streams a month. And you divide that by $3. We're talking about cents. So if you if you want to like support me and you want to help me out, click join the memberships and click one of them. You can join, I think, Wolves or Lions or something. And that's one simple way you can just give back to the channel. If not, you can also leave a super chat. You can leave a donation to the channel. You can also, if you don't want to do any of that, by the way, completely fine. Just leave a like. That's all I ask. Okay, that's all I ask for. Because that helps the YouTube algorithm share this with other people. All right, I truly appreciate it. Okay, Meta is another one that we're watching today on the Discord. We obviously have a 0-day snipe list that we're going to be trading today. So Meta's going to be one of them that I'll be watching personally. If it can start rejecting 172 at the open, I would like to play this one to the downside. And 165 is too far of a target, so I'm probably looking to get options that are going to be in between somewhere here. One thing that I will mention, since today we're going to have $2 trillion worth of options expiring, it's really important that you do not play too much of the volatility for an extended period of time. So I would say trade the first 1 to 2 hours max and then go and enjoy your Friday. Please don't, this is not the day to sit there the whole day and watch your screen. All right, this is not the day. All right, when so many options are being expired and rolled into and positions are going to go back and forth, this is the day where premiums are going to get burnt very quickly. Okay, Premiums are going to go so fast up and down, it's going to be nuts. So because there are going to be a lot of rolling of contracts, that means to say people are going to be buying and selling contracts and getting rid of their positions and trying to re-expose themselves to other positions. All right. And I'm not just talking retail traders, I'm talking institutional flow. Okay, so that's big money. Smart money most of the time too. So options flow is probably going to be on fire today. So keep your trading light is what I'm saying. Trade the first 1-2 hours, the momentum. We'll be trading that live on Discord. Once again, if you want to know more about Discord, link is in the description. You can join us. We have members of the Discord in our chat right now, I'm pretty sure. Feel free to leave a blurb about our Discord members who are here. We always love hearing your feedback anyway. Nvidia is also one of them we're watching today. AMD pennant, possible formation here, but looks like we're going to chop back into the pennant today. Microsoft also break below 286, sees all the way down into 283 or 284. So maybe 285 puts might be the play on Microsoft. But then, as I said, we want pullbacks first. We really want pullbacks at the market open. Don't chase the open volatility to the downside. This is one of the biggest mistakes traders do. It's like market opens, they see it going down, oh, let me go, sell, short, puts. And then market goes, and then you're like, oh no, what did I do? And then you see red, and then you panic. And then you're like, oh no, I'm minus 40%, what do I do? And then you sell. And then what happens? Immediately, right? So instead of doing that and instead of being first to the line, trying to beat the buzzer, just have a bit of patience. First 15 minutes, 20 minutes, watch. Just watch. Unless you see something with immense volatility and momentum, you shouldn't be taking the trade, okay? So watch for the pullbacks, wait for that, and then take your trade. Once you have a trend form, once you know price action, once you're reading the tape, you're looking at the level 2 data, you're reading and seeing where buyers and sellers are, all right? That's really the name of the game, right? In trading, you have to be patient. Okay. Also looking for an entry on XOP, possibly. I like that as a possible trade idea. LLY is another one that I'm watching. I won't get into the details of exactly what we're about to do with those here. Bed Bath & Beyond, I managed to secure multiple times this week. First entry, 1167, closed it at $14, 700 shares. Took 1800 there. Then had a second entry at $18, and it ran up to $28, and then I had 430 shares there. And then another 400 shares from $18.90 to $25 for another $2,500. So Bed Bath & Beyond paid very nicely this week for me in terms of shares. If I bought options, I probably would have made more, but I don't like that volatility. I stick with my rules and keep it simple. Okie dokie. Do I have anything else that I want to talk about? Not really. ExxonMobil also independent here, so watch for a breakout possibility. Above 95.36 would see upside. 95.36 bounce, obviously. And then downside is pretty far below, so like around 90 bucks or something. 90, maybe 89. 89, break below, bounce that way. Okay, that's all I have for you guys today. I truly appreciate you guys taking the time out to be here, though. It's Friday. And we'll be back on Monday with another live stream. If you maybe came into the stream late, you can watch the stream live right after I end it. And you'll be able to watch the video right away on demand. Just skip the first 5 minutes or so. I think there's an intro and stuff, but listen through the first 20 minutes. It's the most important part. And yeah, truly appreciate you guys being here. And I will see you guys on the flip side on Monday. Peace.